Hi, Steve Walker here from Promised Money, and today I want to talk about the mortgage market, interest rates, where they are now, what's happening right now, and a little bit more about the long term. A while back I explained what swap rates were and how they affected the market, and told you about a possible blip in the United States which might come and affect us, which it turns out it probably did. So let's just quickly go back to swap rates. Have a look at this graph. So this graph shows you the swap rates, which are the rates that long-term money has been lent at, and it's a good reflection of where the market thinks things are going. So you see the big spike there. That big spike is as we were still trying to get hold of inflation, and then there was an announcement to say, oh, inflation didn't go up quite as much as we thought it was going to do, and there was a big drop, and you can see that the swap rates came down. Now, when swap rates come down, then lenders go, crikey, this is good news. The long-term prospects are looking good. Therefore, if the cost of long-term money is coming down, we can probably lower our fixed rate costs because it's not going to cost us as much, and that's how it works. So swap rates came down. Lenders reacted a little bit, but not hugely, because then I told you about the US, where they'd increased their rates a little bit, even though inflation was only 3%. They increased their rates, and we thought, I said that might have a knock-on. It did, and you can see that rates then started to climb up again. And there's another smaller peak you can see there, and that was when we had the announcement for the base rates. Now, I think that little climb there back up was because a little bit of uncertainty about what's going to happen with base rates, a little bit of uncertainty about the US. Base rates only went up 0.25%, and then you can see swap rates have come down again. So I think the overall trajectory of swap rates is down. We might see another increase in base rates. Don't rule that out, but I think the overall trajectory is hopefully down, and hopefully we're over the worst, as long as there's not something catastrophic that happens in the economy. So what does that mean for you as a borrower? Right, if you're on a base rate at the moment, that's going to follow the base rate. So I'm talking about if you're thinking of trying to get into a fixed rate deal now or sometime in the future. What we've seen in the last couple of days is lenders piling into what's a bit of a rate war, and undercutting each other. Now that's always a good sign, because that's showing that lenders have a lot of confidence in the long-term trajectory of rates. Therefore, they're going with rates that they consider to be really, really competitive, rather than sitting on their hands, and they're after your business. So if they're offering really, really competitive rates, and when I say big drops, I saw one 0.65% reduction in their fixed rate offering. That's massive. That's a massive drop. So if they are feeling good about the future, then you should feel good about the future, because it means that hopefully the worst is over and rates are going to come down. So you could now probably get a fixed rate deal much better than you could a week ago. And the advantage of that is you could be paying less. It means that the repayments are lower, therefore the affordability works better, therefore you can borrow more, and therefore you can probably get into a house this week that you might not have been able to afford a week ago. That's what it means in real terms. And if the trajectory keeps going in the same direction, that's only going to get better. So what do? Do you hook into a deal right now, or do you wait? Well, the question is, what's the benefit of waiting? The benefit is that rates may drop, but what's the downside if you don't get into something now? It could go the other way. Who knows what might happen? There could be another Ukraine. There could be something else. There could be an announcement from anywhere around the world which wobbles the markets. So if you do put an application in now and you get onto one of today's fixed rates with a lender, and talk to an advisor about that to make sure you're getting onto one that's most suitable for you. But if you do get hooked into one of those, if the rates come down, you can still follow the rate down and say, actually, that deal you gave me last week, I'd like the one that's available this week. That's good news. But if the rates for some reason go back up, you've still got this one at the lower rate to say, this is the one that you told me you'd give me, and it will have a shelf life that you can keep it for. So you can lock in a rate now, but still get the benefit of any future drops over the next month or two. So I would say yes, if you're at the point where you want to remortgage, or you're forced to remortgage, or you're having to product switch, get on with it. Now, by the way, that's generic advice, not specific to you, Mr. Giles in Dewsbury. It's generic advice. So But let's just talk about what this means overall, because if we think that interest rates have peaked or close to peaking, and the swap rates and the lenders' reactions recently suggest that they think that might be the case, then that's going to bring confidence back into the market. So people who were sitting on their hands and not buying property, over the coming weeks and months, they're going to be seeing this news come out, and it'll filter through slowly, and they might get off their hands and start buying stuff. So we might see more property transactions, which means less on the market, which could even mean that properties go back up again. In fact, I'm sure it will mean that properties start to go back up again, or at least normalise. So I know there are people out there, especially property investors, who are out and about at the moment trying to pick up properties because they are cheap. And they are doing. We're financing them for them, so I know they're doing it. So I think we're going to see the property market starting to level out and get a little bit better. I think we're going to see confidence come back into the economy, and people feeling generally better about things. So by all means, keep watching the trends, keep watching what's going on. But overall, I think it's good news for borrowers, and hopefully it means that we are over the worst. So. If you are struggling with your repayments, by the way, and many people are, do check out the video I put on our YouTube channel a few weeks ago, Promise Money on YouTube, and it's about some of the options where you can approach your lender and ask for help. Definitely worth looking at that. Some interesting stuff on there. But as ever, please do subscribe, please do watch our videos, please do share and like our videos, and if you need more information on anything, go to the website promisemoney.co.uk. Thanks for watching. Bye-bye.